Now, for housing, seen this big boom, which we've seen in prices. And this big boom, it's been going on, but especially since COVID, because easy monetary policies, buying 120 billion bonds every single month, right? Which is forcing rates to stay low, making credit easier and borrowing easier, inflating asset prices like crazy, and everyone's buying houses now. And we're going out there and people say, whoa, this is going to result in a 2008, 2009 collapse. I'm going to tell you something. Based on my research, we're in the second or third, maybe third inning of this boom. That's the baseball analogy, guys. If you don't know baseball, it's 9 innings. So you got a pretty big boom ahead. And it sounds crazy because prices are up so much. I'm going to break down Dick's Sporting Goods later. Dick's Sporting Goods just reported today, blew out the numbers. Maybe blew out the numbers more than any company I've seen in the past year, even more than Goldman Sachs. I mean, they issued like a massive dividend. And I made a mistake because when they blew out the numbers last quarter and said we're going to earn, $8 a share, $8.50 a share in 2022 or whatever it was, I'm like, damn, I kind of missed it. Because I know I go to Dick's Sporting Goods, I shop there, and they're kicking ass right now. And they're coming back and things are great. So I didn't buy the stock. And today, the stock is up 15%, whatever, up tremendously since that quarter. And even sometimes I'm programmed. I'm using this as an example to say what I did wrong, because I'm programmed to see this. Like a lot of people say, well, I missed the housing boom and the housing stocks, or I didn't buy a house. And you think it ends and you don't want to get in it because you're looking at, maybe Toll Brothers up 150% over the past 2 years. And you're looking at it going, man, it's up 150%, man. I freaking missed it. I don't want to buy it. And next thing you know, 2 years from now, it's up another 150%. Because that growth is just starting. And we're programmed to just look at it like, oh my God, we missed it. And for me, I wanted to buy Dick's and I didn't. Sure enough, it came out today. And you know what? That stock is cheaper today than it has been in the past 2 years. They raised their earnings estimates to over $12, $13, close to $13 from $8.50. I mean, you're looking at a company that's trading at like 10 times forward earnings. Again, Daniel and I are going to break that down later, but it's relevant to this conversation with housing because people feel like they missed the boat. And I even felt like I missed the boat. I made that mistake. But when you're looking at housing, holy cow. Because I know you're not hearing that housing is in the second and third inning. If you're watching CNBC, a lot of people I respect there. I'm not saying it in a bad way. Other media outlets. Okay, just like they were pumping up Ford, GM's EV portfolio instead of highlighting enormous production cuts that were coming. It's more than 50% now. So, no one's really talking about that. I keep hearing how housing's going to crash. Again, 2008, 2009 depression, home prices collapsed. I'm going to be honest with you. Dead honest with you, like I always am. People are telling you that we're going to see something similar to 2008, 2009, and it's coming quickly, are either trying to sell you something, they want to get on TV by making a bold call, because that's what you need. It's entertainment TV, right? You can't say, well, I think housing's going to go up and we're going to, it's going to be steady and trend high. Nobody wants to hear that. You want to hear it's going to freaking crash, you're going to die, or it's going to go through the roof and create tons of billionaires, right? That's what you want to hear. That's what gets on TV these days. And can't blame them. That's what everybody wants to watch. We're programmed to be entertained no matter what, even when it comes to our money, which is sad, but it's truth. But people are telling you this, trying to sell you something, trying to get on TV, or are total fucking idiots and don't understand data. They're just not looking at it. I mean, there's almost zero supply in the market. Demand's through the roof. Interest rates are going to stay low. Talk about Jackson Hole. Oh, there's never been a major policy decision in Jackson Hole since Greenspan, right? I don't know why they're making a big deal because earnings season's over and there's not a lot to talk about. So Jackson Hole, Powell's going to talk. It's supposed to be this big meeting. Now, of course, Delta. I mean, they were having, Wyoming is a friendly state, friendly business state, friendly tax state, friendly everything, crypto, laid back when it comes to COVID and things like that. But Delta, whatever they change, they're in the danger zone. So now everything's going to be like, an online conference, virtual and stuff like that. Powell's going to speak. He's going to talk about tapering. I'll break down tapering and what that means. But tapering is just reducing the amount of bond purchases by a little bit. And it takes 6, 7, 8 months to do. Maybe they raise rates a tiny bit. But it's not going to result in a massive increase in rates. To the point where they're still injecting money into the market. People are more richer than ever. And for me, some of the homes I looked at, they want to see a pre-approval first. So I had to get pre-approved. And I got pre-approved and sent them all in. Again, pre-approval is not an actual approval. It's pre-approval. But they said, based on what you're sending me, if this is all accurate, we can lock in a rate on a jumbo loan, which includes 1 point, which is 15 grand. They take care of 10 grand. So it's only 5 grand for me for that point, which isn't bad. The rate is 3.15% for a jumbo loan. Are you freaking kidding me? I mean, that's insane. I had no idea. This is my industry. I had no idea it would be that low. I thought it was going to be higher. I mean, think about the 80s and the rates you're paying on mortgages in double digits and crazy stuff. Holy cow. We have a Fed that's going to continue to print money. Even if they taper a little bit, they're going to continue to print. They're going to continue to keep rates low for a very long time. Maybe they start raising them a tiny bit, but that's going to maybe 2022, 2023 story. Maybe. And now they're going to use Delta as a reason not to do it. Banks, you're looking at banks, really, they're gonna, it's the same. Like, we didn't even know what was going on. Nobody knew what was going on. Nobody knew about mortgage-backed securities. Nobody knew about collateral debt obligations. Nobody knew any of this crap. Subprime wasn't just subprime. It was leveraged, 20, 30x, synthetic of synthetic loans. You need a 5% collapse in housing. Everything was done. The banks almost went out of business. Nobody knew AIG took on all this risk. And the banks are much better. They're better capitalized today than they've been in the history. In the history of a country. The balance sheets are being monitored every 12 months through stress tests from the Fed. They have to keep this money on the balance sheets. So you have the Fed there, which will bail out in a heartbeat, but they are monitoring the banks. And it's not that easy, because when I was looking for a loan to buy a house, I was a little worried. This is 2010. And I remember we were looking in New York in 2006-07. Before coming to Florida, where we finally bought a house. And thank God we didn't buy a house, because we would have bought it at the top of the market. But I remember going to several loan offices. I'm like, hey, I think me and my ex had 40 grand in the bank. And we're looking to buy like which is average price back then during the boom was $550,000. I'm like, holy shit, we're not going to get approved. I mean, our mortgage is going to be huge. It's a little bit more than what we're making. I mean, we were going to rent out downstairs, but we didn't tell them that. And they're like, you're going to get approved easily. I said, easily? They said, yep, no problem. Compared to the loans that were given out, holy cow, you got it. Why? Because they would just sell us the loan, and then once they bought, what would they do? They would sell it off to Fannie and Freddie. So there was no risks to them. Just sell a loan, make the money, pocket. Everybody makes out on commissions across the board. It's not like that. I mean, my second house that I bought for my mom to live close to us, is I had to pay cash, even though, I showed records of, hey, run my own business. I took a very low salary at the beginning, first few years to get this thing off the ground. But still, I had, you're looking at the money. It was just like, we don't care. We can't do it because it's the second house, and I had to pay cash for it. So to say that it's going to be like 2008, 2009, when you needed a library card to get a $600,000 to $1 million loan, I mean, come on, you really don't know this market. You got to be out of your mind. But even if you don't believe this, because some of you are looking at prices, my home prices increased dramatically. I don't expect it to increase dramatically going forward, but here's some more stats. These are stats, guys. These are stats that I don't hear a lot. The monthly supply of homes, just 4 months, it's normally 6. Not enough supply in the market. Annual household formations, homes built 1.2 million. That's the average from 1990 to 2020. Okay, we're looking at a very long period. It's at 3.1 million, almost triple. Household formations. Household debt as a percent of disposable income. The average is 11.2%. That's from 1959 to 2020. It's at 9.1%. Less debt. More money in the balance sheets. Home price appreciation averages 5% annually dating back to 1976. It's currently 12%. It's not going to stay there. But even at 4%, say if it goes down to 4%, it's higher than the rate you're going to pay in your loan, making homes very attractive as a long-term asset, along with all assets. The personal savings rate was 9.3% dating back to past 5 years. It's over 20% today. Translation, that amounts to over $2 trillion excess savings that consumers are sitting on. Where do you think that money's going to go? It's not going to sit in savings forever. They're going to be buying assets because rates are going to stay low, and even if they tamper, it's going to result in, instead of $120 billion a month in bond buying, they're going to cut it to 110, 190. Again, 7, 8, 9 months it could take. If they finally decide to do it, they'll talk about it a little bit, but they're still not going to do it. And I'm saying that with Jackson Hole coming out Friday, with Powell speaking. These are facts, guys. I know debt's through the roof. So, you're looking at household wealth is the highest it's ever been, record highs. Because that's the prices are surging. You look at Toll Brothers reported Monday night after the close. It said net side contract value was $3 billion, up 35% compared to 2020's third quarter. Again, this is for the quarter, and contracted homes were 3,154. That's up 11%. So net signed contracts in both dollars and units, third quarter records. Backlog, over $9 billion, the third quarter. The third quarter, up 55% compared to last year's third quarter. Homes in backlog, close to 11,000, so it's 10,600, up 47%. They say quarter end backlog, both dollars and units, all-time records. The CEO said, Doug Yearley, demand continues to be very strong. The housing market is being driven by many strong fundamentals, including low mortgage rates, favorable millennial-driven demographics, a decade of pent-up demand, low new home supply, and a tight resale market. It's not one catalyst that's driving all this. As we expect strong and sustainable demand for our homes in the years to come. Last month, D.R. Horton stock fell because they reported 17% decline in orders for the quarter, and people are like, why the decline? The housing market, it's over, and we've seen it in starts and this and that. Got to look under the hood, guys. That's what you got. That's how you find the best. Look under the hood. Don't listen to what everybody's saying. Don't even listen to what I'm saying. Look under the hood and do your own research. Because when you do, it's the land development community projects. They can't keep up with current demand. Actually, we cannot keep up with current demand right now. So now they're going to be able to fix that. Again, that's a major problem when you have a company. People are always like, oh man, we want demand. We want demand. We want to see more demand. Well, if you get too much demand and you don't have the people to handle it, that's also a big problem that you have to deal with. And D.R. Horton, I wouldn't classify as, it's not Lennar or Toll Brothers. And Lennar, I think, reports in a couple weeks. But I saw this, what they're saying, firsthand all over the Jacksonville area. Massive, massive, massive building taking place. But if you look at the home builders, they can't put up these homes fast enough to where the developers, where the sales agents on the properties are selling these things, they're only selling 2 to 3 homes a month. So you have to put your name on a waiting list to be considered for the following month as new batches of homes are getting built. And this is due to supply shortages, raw materials. I mean, the strategy makes sense because when you're seeing raw material prices surge, so you have Toll Brothers, Lennar, D.R. Horton, they're only building a certain amount of homes at a time. Then they'll come out with the next month or maybe 45 days, and they're able to actually raise those prices if they're seeing raw material prices go higher or lower. Now, how'd they come up with this strategy? Because these guys have been in business for decades and decades. They've been through all this crap. I mean, those who believe we're in a bubble, and these home builders are smart. They lived through the credit crisis. There's declines in the 90s. I mean, they've been around for a while. They were given a huge lifeline in 2008, 2009 with the whole stimulus package. And I remember because I just started working at Stansberry and I sent a note to Kramer. And Kramer was like, oh my God, this is a great thing. And he mentioned me on Mad Money, a TV show, whatever. But their carryback losses, they were able to carry back instead of 1 year, it was 3 years. Basically put a massive floor under the industry. Because now you're seeing a boom, 2010, 11, 12, and now you're able to even though you're seeing a boom, you have these losses. It's these guys weren't paying taxes or anything. It was huge. But right now, they're not overbuilding. You look at suppliers for windows, roofs, floors, all that crap. They're booked out for months. Interest rates are low. People have more money than ever. Inflation is driving asset prices higher. You see any of those trends stopping anytime soon? In Florida, again, we're talking about northern Florida. Demand's insane. I'm hearing that from numerous real estate agents. There's more real estate agents than there are houses for sale. I bet you a lot of you listeners could say that in your area. Because it's not just Florida. I hear from you. I'm hearing that in many states. Supply is low. Homes are flying off the market. Massive backlogs for any supplies. Try to do anything on your house. I mean, if you're looking at this trend and you're looking at underlying factors, you can't see it slowing for years. You really can't. And you look at Best Buy, I'll talk about that later with Daniel. At-home categories, appliances remain very, very healthy. I mean, things that are underlying that you see, I mean, they're still growing tremendously.